This year I shared more than 1,300 free signals and forecasts for gold, Forex, commodities and indexes. In my predictions, quite often I relied on price action patterns. In this video I will reveal the winning rate of each pattern, the most accurate formations and the least accurate ones. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. Please note that all the setups, all the forecasts, all the signals that I share this year are available on TradingView, and you can backtest any setup by your own. Just choose the relevant tag on my TradingView page. And here is the list of the patterns that I personally traded. The first pattern that I traded was a double top and double bottom. And the classic double top should strictly have the equal highs, while a classic double bottom should strictly have the equal lows. And we are expecting a bullish movement when the price violates the neckline of a double bottom, and we are expecting a bearish movement if the price violates the neckline of a double top. Cheaters, don't miss a big Christmas sale. Until New Year, get 40% off on everything. 40% discount on my premium signals, 40% discount on my trading academy, and 40% discount on my book and video course. For more info, check the link in the description below or text me in one of the social networks for more details. The second pattern is a cup and handle formation, or double top with the lower high, or double bottom with the higher low. And again, the pattern gives a strong bullish or bearish signal when we see the confirmed neckline breakout. Third pattern is a classic head and shoulders pattern and the inverted one. And with the head and shoulders pattern, again, for us, the signal is the breakout of the neckline of the pattern. Pattern number 4, the horizontal range. And the range is the extension of a classic double top or double bottom. And we see that the market is ranging when we have at least 3 equal highs or 3 equal lows. And again, for us, the signal is the breakout of the range's neckline. The next pattern is a flag formation, bullish and bearish flag. And flag should strictly be a parallel channel. And for us, a bullish signal will be the breakout of the resistance of the bullish flag, while a bearish signal for us is the breakout of the support of the flag. The next pattern that I traded this year was a rising and falling wedge. And in a falling wedge pattern, in a classic one, the price action should contract, and bullish breakout of its upper boundary is a very strong bullish signal. In a rising wedge pattern, the price action also contracts, and bearish breakout of its support is a very strong bearish signal. There is the variation of the wedge pattern that I also traded this year, the expanding wedge. And for us, again, the breakout of the resistance of the wedge will be a strong bullish signal, while a breakout of the support of the falling expanding wedge will be a strong bearish signal. The last pattern that I traded this year was the ascending and descending triangle. The descending triangle is the continuation of a double top formation with the lower high, and it should have at least 2 lower highs, and the breakout of the neckline of the pattern is a very strong bearish signal. While in the ascending triangle formation, we should have at least 2 higher lows. It is the continuation of a cup and handle formation, and the breakout of its neckline is a strong bullish signal. Please also note that all the patterns that I traded were formed on key levels, on key vertical or horizontal structures. Remember that the performance of each pattern drops dramatically if it is formed beyond the key structure. Now let me explain to you how do I assess the performance of each pattern, because as we discussed, the formation of the pattern by itself is not a signal. For us, the signal is the breakout. With the horizontal patterns, like double top, head and shoulders, we are looking for a neckline breakout. That is the signal. While with the vertical patterns, like the flag, we need the breakout of a trend line. That is a strong signal for us. I will say that a double top with the lower high is a winning pattern if after the breakout of the neckline, the market managed to reach the closest strong structure, not violating the highs of the pattern. And if after the breakout the price bounced and invalidated the highs of the pattern and set a new higher high, I will say that such a pattern is a losing one. Please also note that some of the setups that I shared this year could combine multiple patterns. And now let me share with you the performance and the accuracy of each pattern. Double top and double bottom with equal highs and lows. I shared 85 setups with this pattern, and the accuracy of this pattern this year is 62%. Cup and handle formation, or double top with the lower high or a double bottom with the higher low. I spotted 96 setups with this pattern this year, and the win rate is higher than with the classic double top or double bottom. Win rate of a cup and handle pattern is 65%. Head and shoulders pattern and the inverted head and shoulders pattern. I shared 58 forecasts and signals featuring the head and shoulders pattern. The win rate of the pattern is 64%. Then goes the most accurate pattern of this year, the horizontal range. I spotted more than 148 setups featuring the horizontal range, and the accuracy of this pattern is phenomenal. It is 74%. Bullish and bearish flag. 38 setups with bullish and bearish flag were shared this year, and the winning rate of the pattern is 58%. Then goes the classic rising and falling wedge pattern. And the performance of this pattern is slightly higher than the performance of the flag. Among 62 ideas, among 62 signals that I shared with the wedges, 59% were accurate. Then goes the worst pattern of this year, the expanding wedge. And I spotted 24 setups with the expanding wedge pattern, and the accuracy of that pattern was just 51%. The last but not least is the ascending and descending triangle. And I shared 64 setups, 64 predictions featuring the ascending and descending triangle formation, and the win rate of the pattern is 66%. The most important conclusion that we can make analyzing the statistics of each pattern is that all the patterns have the win rate higher than 50%. And in trading, if you learn to combine the price action patterns with technical indicators, with fundamentals, with some other technical tools, the performance of the pattern will increase dramatically. So I want you to try different methods, try different techniques, and improve your trading performance next year. Also, traders, do not forget about big Christmas sale, 40% off on everything. Signals Trading Academy book and video course. For more info, check the link in the description below. Thank you so much for watching, traders, and Merry Christmas!